Hello, ladies and gentlemen. Welcome to Triple in Media. I am Dr. Nik Nikam. In this presentation, we're going to talk about the pros and cons of selling your universal life insurance to an insurance company and getting cash now so you can spend that money with you and your family. So let us look at what are the steps involved and what you can expect to get out of your life insurance, and should you be seeking any help to make the process easier. We're going to go through step by step, so please watch till the end of this presentation, and it will be really useful if you're seriously thinking about selling your life insurance policy, especially universal life insurance policy, for which you will be paying premium until your last breath, which makes a lot more sense to cash in now and spend the money, especially if your children say, we don't need your money, we need you to save that money and spend it for yourself. That's the beauty of it. This process will explain to you how you can cash in your policy and get part of the money, not all of it, and spend it now for yourself, as your children don't need it and you don't want to be paying hefty premiums in your 8th decade or 9th decade while you are trying to use Social Security to pay your electric and grocery bills. Anyway, let's get down to the complete details of this presentation, and please do watch it, and it will be a great eye-opener for those who are paying very heavy insurance premiums in the later stages of your life, which you could use to minimize your expenses and use them for better purpose than paying for a policy which your children don't really need because they are well off. Luckily, you raise kids who are able to support themselves, and they want you to cash in that and enjoy your life. So let's get to work. Let's consider a hypothetical situation. You're 75 years old, you had a very successful a doctor's career or an engineer, and you have made a reasonably good amount of money, and you have a history of heart disease, diabetes, heart failure, coronary artery disease, and you have a life insurance, universal life insurance of $1 million, for which you may be paying $10,000 to $15,000 in premiums because of the age. Your family says, just sell your insurance or stop your payments and just cash out on the life insurance. And the life insurance may have like $10,000 to $50,000 value because it's universal life and it's eating up your money. Now you're in a dilemma as to whether you should be selling your insurance, get some money out of it and spend it, and also stop paying those hefty premiums in the 7th and 8th decades of your life, where you should be enjoying your life, relaxing, going for a beautiful concert or a dinner. Okay, let's look at what is the process involved here. Can you sell your life insurance to an insurance company which can buy out your insurance, continue to pay the premium until you pass away, and then collect the full value of the life insurance? This particularly is useful in universal life insurance or whole life insurance, not so much useful in term life insurance. The next question is, who will initiate the process? Do you initiate the process, or do you expect your children to initiate the process? If you are expecting your children to initiate the process, forget it. It's never going to happen. You are retired. You were an executive. You were a professional. You have paid taxes. You have filed papers. You are a good trained person. You're retired now. This should be your major project, to take the initiative and go through the process, which may take 3 to 6 months. But it's not a big deal because you probably have handled many more complex problems in your life. But this is going to be talking about returns in a substantial amount, especially if you have an insurance policy of $1 million. Who can buy out your life insurance? I'm going to give you the names of the companies in the United States who can, some of them in your own town, can process these application forms. How do you contact them? How much can you expect? Yeah, this is the $1 million question. If you have $1 million policy, what is the amount you can expect to get back cash right now, rather than waiting till you die and your kids get that money? And as I said, your kids don't want that money. They want you to take that money and spend it for yourself. That is the main premises upon which we are going to be working on. What is the process? Should you be using a broker, a middleman? And what is his cut? And what is he going to do? I'm going to answer all these questions. And is it worth the hassle? That's the bottom line question. So we're going to answer every one of these questions. Please pay attention to every part of this presentation. So here are a list of insurance companies that can buy your whole or universal life insurance policy, which are in the business of not only selling insurance policies, but also in the business of buying insurance policies. So EMG Insurance Brokerage, Texas Republic Life Insurance Company, Western South Life, Bankers Life, and there may be many more. You can just do some like OpenAI, ChatGPT, or Perplexity, or Gemini 2, and ask these questions. I wouldn't go to a search engine because it's worthless. It will list you like 100 different insurance companies without any particular reference to those who are willing to buy the life insurance policies, be it universal or whole life insurance policy. So here are the companies, and you can also get their contact information. And it is important to understand the ability to sell your insurance policy to an insurance company depends on multiple factors, some of which I already alluded to at the beginning of the presentation, giving a case scenario: age 75, hypertension, diabetes, heart failure, and $1 million policy. So all these things are important because they need your entire medical history to process the application. And should you be working with a broker? Eligibility. If you're 75 years old and you say you have a $350,000 or $500,000 or $1 million policy, you likely meet the basic eligibility criteria. So you have to meet certain criteria. And age 75 years is one eligibility criteria that you meet. Then you have to fill out an application. It has to go through the underwriting company. They look through all your medical history and medical evaluations and determine if you're eligible for a policy buyout. Then they will make you an offer. You can review and accept this. They will have a legal team prepare the legal document for the proper transfer of ownership of the policy, life insurance policy, to the insurance company from your personal name. And a third party that will verify all these documents and policy details. Then the ownership of your policy is transferred to the insurance company. In return, you get money into your bank account through an escrow set up at the beginning of the process. What can we expect to get if we have $1 million policy or $500,000 policy? The general range is between 20 to 60% of the face value of your insurance company. Remember now, when the insurance company is buying it, it is buying it for the face value of $500,000 or $1 million. But when you get it, you're getting a small percentage of it. And that makes a big difference when you're using a broker, which I'm going to cover in a minute. So you could expect to get anywhere from $200,000 to $600,000, but more towards $200,000, and there may be additional costs involved in processing paperwork and legal costs and other stuff. So keep in mind the number varies, and you are the one who is going to be making the ultimate decision as to, is this $200,000 acceptable to me? in addition to any premium that you are paying each year, which is going to be added on to the policy if you had the policy for yourself. So keep in mind that that's an important factor, especially if you have a universal life insurance where the policy payments never stops until you die. It's a sad thing because you don't get the money, but you continue to pay for the rest of your life. Whereas whole life insurance, you may have accumulated enough money for the policy to eat itself by paying the premium for the remainder of your lifespan. I talked about two numbers, namely the face value of $500,000 or $1 million, and then the settlement amount, which could be 20%. So for $1 million, it will be $200,000, and for a face value of $1 million, if the settlement is $300,000, then 20% of the face value of the insurance is $200,000, and 20% of the settlement value is $60,000. I'm bringing this number 200 versus 60,000 because if you use an agent or a broker, the middleman, to just say to the insurance company what you said to them and what they said to you. I mean, that's what they basically do. But if you are an executive and you handle life for 50 years, you should be able to handle this process. And I'll give you some tips on how to negotiate yourself without even being in this field. That's the tip. You have to wait till the end of the presentation. So the average commission is around 20% of the settlement. The industry standards is up to 30% of the settlement. Some brokers may charge you 6%. Some of them may charge you 10% of the face value or 20% of the face value. If it's 20% of the face value, that's $200,000. Let me tell you, if it's 20% of the settled amount, it's $60,000. There's a big difference between $60,000 versus $200,000. If you ever choose to use a broker, look at all these numbers. These are extremely important numbers because first you have to understand how much damage they are going to do before they can do any good for you, or can they really do anything good for you more than what you can negotiate yourself. And I'm going to give you some tips on how you can negotiate yourself better than the broker, because at the end of the day, the broker is going to say, what do you want to settle for? For that, you're going to give him $200,000? No. Let's move on. In extreme cases, the brokers may ask up to 50% of the face value. Tell him bye-bye. Some brokers charge 6% of the death benefit. Again, as I told you, the face value of the policy is different from the amount you negotiate, and the broker's fee should be based upon the amount collected, just like the lawyers. If they settle on a dispute, they get 20% or 40% of the settlement, not what you initially asked for. Okay. Some brokers charge less than 6% death benefits, but I would not tie this to the death benefits. I would tie this to the settlement amount as a percentage, which is going to be considerably smaller than any amount tied to the death benefit. Okay, there's a long list of things that you can do in order to determine what is the best approach. I would say the best approach would be to apply for these insurance companies yourself, because there are so many. I'm not going to go through each one of these items. You can just pause this and write it down, or if you want, you can send me a request and I will send you this PowerPoint presentation and you can use it as you seem useful. From reviewing this chapter, I have realized you do not probably need a broker, the middleman, to do any negotiations, because I'll tell you why. The average settlement takes between 2 to 6 months at the most, depending upon the insurance company. Lighthouse Life can settle in 60 days or 45 days, whereas Horrible Life takes 2 to 4 months. Some companies may take up to 6 months. Like if a person is critically ill, they can process this in 6 to 10 weeks on an average. let's say the person is sick, who has less than 6 months of lifespan, but you need the money to pay for the medical expenses, or you need the money to buy the medications needed for that person. It's a very, very painful time in your life, and then I think that can be settled in weeks rather than months. The factors, of course, depend upon the type of insurance policy. After all, the person who is going to buy your insurance policy wants to be made sure that they get the face value of the policy when the person passes away. I mean, that's expected because, that's part of the transaction. Now, here comes the most crucial part, and that is, what is your role as a policyholder in initiating this process? As I said, your children are too busy, they are out of town, they have their own kids, they have no time to sit down and do your paperwork and do Zoom meetings with you and the insurance company. Forget it. You and your spouse have all the time in the world. You can spend 24 hours a day on this project, and you do it yourself. You need to do one little trick I'm going to tell you right now. That is, apply to 3 or 4 different insurance companies. Because in the process, you learn the system. Number 2, you're the one who has to fill out the applications because you know all the data. It's no point in somebody asking you to give the data to them and for them to fill out an application. You fill out the application. You need to provide the medical history. You need to provide the names and contact information for your doctors and any hospitals that you have been if they request. So you have to do all these things. So why get somebody else to take your money? Why can't you do it yourself? If you need some assistance, you can ask your kids to do just a part of it. Preparing an application, something like that. If they have time, if they can sit on a weekend with you and give you some partial help, but you should be the lead person in trying to get these things started and moving. You are the engine behind this entire journey. So once you provide all the details of your insurance policy, insurance premium, all the things that you have collected, and once you give the policy, a copy of your policy, which you get each year as what your face value is or what the surrender value is, and you submit all these documents and then complete the application. Some people may require you to get a medical exam, which is just kind of a evaluation. No tests or anything are going to be done for this. After that, you sit and wait for them to make you an offer. And they may have a question saying that, have you applied for any other insurance agencies for a similar settlement? If it is, you be faithful and tell them, yes, I have applied to this insurance company, I have applied to this insurance company. So they know that you are serious about settling your policy. Number 2, they are going to be more competitive. So they are not going to take you for a ride because you are an educated consumer thanks to this presentation. And now you can evaluate the offer from one company versus the other, plus how easy it is to deal with a particular individual in a company compared to the other individual in a second company or a third company. Then you can make a final judgment as which company you want to go with and how easily your policy can be transferred and money put in your account. So ladies and gentlemen, it's a good idea to apply to at least 3 different insurance companies because you already collected the data, your personal information application, which is already there. That's why this is where your children can help you. Putting all this in a Word document, which you can just copy and paste, your medical history, doctors' names and contact informations, all these things can be collected by your children because some of them may be assisting you with your medications, doctor's visits, and hospital visits and all these things. So they are familiar. They can collect all this information and make your life easier. If you are nice to your kids, I mean, that's a different topic altogether. I'm not going to get there. And the process is, you apply and get offers from 2 or 3 different companies and see what one which one suits you best, and then you make a decision, move on, collect the money, and spend it as your children said. They said, we don't need your money, but we are busy. We don't have time to help you. Baby, we are not here to babysit you. We want you to go and do it for yourself. And if you get a good offer, you get it. And when you get an offer from 2-3 different companies, let us sit down and go over and see which one works best for you. And then we proceed with the terms. So the application process, documentations, receiving an offer, choosing the best option, then transparency. As I said, it's very important for you. If they ask you a question that have you applied, say yes, I have applied to company B, C, D, whatever you want to do. Here are some real life examples. Sandra, 79 years old from Bakersfield, California, had a life insurance policy of $367,000. Abacus Life settlement offer was $110,000. If you were to get this is almost like 30% of the face value, and you don't have to make any more insurance premiums for the rest of your life. This is a good offer because this is money in your bank account now while you're still alive and your spouse is still alive. You can take this money, buy something for yourself, buy something for grandkids, and let them have fun. So why you wait till you die and then settle the paperwork and all these things? No, let's do it now. And here's another example. Williams, 82, from Wayne, New Jersey, face value of $4 million. $1.2 million was a settlement. 30% of the face value of the life insurance. This is especially true if you have a universal life where your payments probably never stop because of the fluctuations in the interest rates, because of the fluctuations in the price, in the policy premiums as you get older and older. So, ladies and gentlemen, I'll have to say, if you want to sell your insurance policy and get cash now and spend it for yourself and for your grandkids, there is an option and there is a process. And the process is fairly simple compared to complex things you have dealt with in your life. Give it a try and let me know what you think. Thank you so much for watching this presentation. I know it's a long presentation, but when you're talking about $500,000 or $1 million, I think it deserves some attention. And I will see you in the next presentation. Bye.